Your debit card is costing you money every single time you swipe it, and most people have no idea it's happening. We've been sold this idea that going cashless makes life easier. Tap your card, done. No fumbling with bills, no coins jangling in your pocket. Clean, modern, convenient. But here's what nobody mentions. Living completely cashless in America comes with a price tag, and it's not just the occasional ATM fee. It's a pattern of small financial penalties that quietly add up week after week, making it harder to save and easier to overspend without even noticing. Today, we're breaking down the real costs hiding behind that card in your wallet. Because once you see how this works, you'll understand why cash isn't outdated. It's one of the simplest tools to protect your money. And by the end of this, you'll know exactly where you're losing money and how to stop it. This matters right now because with prices higher than ever and most people living paycheck to paycheck, you can't afford to bleed money on things you don't even see. Let's start with the biggest hidden cost, overspending. When you pay with a card, your brain doesn't register the transaction the same way it does with cash. Studies show people spend 12 to 18% more when using cards compared to cash. That's not because cards are evil. It's because handing over physical money creates a psychological pain point. You feel it leaving your hand. You see your wallet getting thinner. With a card, there's no pain. Just a tap, just a number on a screen that doesn't hit emotionally until you check your account days later and wonder where it all went. So if you're spending $2,000 a month on everyday stuff, groceries, gas, coffee, lunches, going cashless could mean you're spending an extra $240 to $360 a year without getting any additional value. That's real money disappearing because the friction is gone. Now let's talk about the fees you probably don't notice. ATM fees if you need cash suddenly. Overdraft fees because your card let you spend money you didn't have. Minimum purchase requirements at small businesses that pass credit card processing costs onto you. Some places even charge a convenience fee just for using a card. And then there's this, merchant pricing. A lot of small businesses offer cash discounts or mark up card prices to cover the 2 to 3% they pay in processing fees. You might not see it listed, but you're paying it. But here's the part nobody talks about, subscriptions. When everything's on autopilot with your card, it's easier to forget what you're signed up for. Streaming services you don't use, apps you forgot about, gym memberships, they keep pulling money because there's no moment where you have to actively decide to pay. It just happens. Cash forces a decision every single time. Here's where it gets practical. Cash creates natural boundaries. If you take out $200 for groceries and entertainment for the week, once it's gone, it's gone. You can see it. You can count it. You know exactly where you stand. Cards don't do that. Even if you're checking your app daily, it's still abstract. Pending charges, delayed posts, it all blurs together. And that delay between spending and seeing the damage makes it way easier to justify one more purchase. This is why the envelope method still works. It's not old-fashioned, it's effective. When you allocate cash to specific categories, overspending in one area means you physically can't spend in another unless you make a choice to move money around. That friction is protective. Let me pause here and clarify something. This isn't about fear or conspiracy, it's about awareness. When you go fully cashless, every single purchase you make is tracked. Banks, apps, companies, they all know exactly what you buy, where, and when. That data gets sold, it gets analyzed, it gets used to market to you more effectively. And while that might not feel like a direct financial penalty, it is, because the more these systems know about your habits, the better they get at nudging you towards spending. Personalized ads, you might also like suggestions, limited time offers based on your behavior. You're being studied, and that study is designed to separate you from your money. Cash is invisible to that system. It's private. It's yours. Nobody's tracking it, analyzing it, or using it to sell you more stuff. Here's the reality check. Systems fail. Cards get declined, payment processors go down, your bank app glitches, and when that happens, if you don't have cash, you're stuck. I'm not saying you need to stash thousands under your mattress, but having some cash on hand, whether it's $100, $200, or $500, gives you a buffer when things go wrong. It's not paranoia, it's just smart. And beyond emergencies, cash is instant. No waiting for transfers, no holds, no this'll post in 2 to 3 business days. It's done. So here's what this comes down to. Going cashless isn't inherently bad, but treating it like the only option is costing you. The overspending, the fees, the lack of boundaries, the loss of privacy, the vulnerability when systems fail. None of this is obvious because it happens slowly, quietly in the background of daily life. But once you see it, you can't unsee it. Using cash for certain categories, groceries, entertainment, eating out, gives you friction in the right places. It makes you more intentional, it keeps your spending visible and real, and it protects you from the psychological tricks that make cards so profitable for everyone except you. You don't have to go fully cash, but leaning on it more, especially for discretionary spending, could be one of the simplest ways to keep more of your money without feeling restricted. You're not behind because you still use cash, you're just paying attention. If this helped you see something you hadn't noticed before, I'd love it if you liked this video and subscribed. We're here every week breaking down the money stuff that actually matters in real life. Thanks for watching. I'll see you in the next one.